Good evening, IAC 11 students. This is Francis Kaliwan. Hello. I will discuss our handout on current liabilities, specifically items 1 to 11 only. Dean Empleo and Mr. Panganiban will discuss the remaining problems. Okay, so let's start with problem 1. How much liabilities are current as of December 31, 2019? According to IAS 1, definition of current liabilities, current liabilities are liabilities which the entity expects to settle in its normal operating cycle or to be settled within 12 months after the reporting period, or the entity holds that particular liability primarily for the purpose of trading, and most importantly, the company does not have unconditional right to defer settlement of the liability for at least 12 months after the reporting period. And additionally, in paragraph 72, an entity classifies its financial liability as current if they are due to be settled within 12 months, even if the original term was for a period longer than 12 months and an agreement to refinance on a long-term basis is completed after the end of the reporting period. Meaning, if the refinancing on a long-term basis is completed on or before the end of the reporting period, the financial liability is classified as non-current. Okay, so let's apply that provisions in answering problem 1. On December 31, the company had 1 million short-term notes payable due on Feb 14, so it's current. On February 15, the company issued bonds with face value of 900,000. The proceeds plus additional cash were used to liquidate the 1 million short-term notes. So what happened here is the 1 million was refinanced by issuing a bonds payable plus 100,000, or was liquidated. The refinancing happened after December 31, meaning the refinancing will not affect our original classification of this 1 million short-term note as current. So 1 million is current. Next, 500,000 notes payable is due on March 15. On December 31, the company signed an agreement to borrow up to 500,000 to refinance the notes payable on a long-term basis. The financing agreement called for borrowings not to exceed 80% of the value of the collateral. So if Manila would borrow 500,000, the value of the collateral must be 500 divided by 0.8, at least 625,000. At the date of issue, the value of the collateral was only 450,000. So what happened here is 450 times 80%. How much? 360. Si 360,000, ito lang yung pwedeng mahiram. So, the refinancing. So, ito lang yung refinance portion. 360,000 was refinance. So, of our 500,000 liability, 360 is non-current. And the balance of 500 minus 360, 140 is current. The financial statements were authorized to be issued on March 31. So 1 million plus 140, only 140 are current liabilities. Valencia has the following liabilities at December 31. 8.9% note payable issued on November 1, October 31 maturity date. So that's 10 months from December 31. So 150 is current. 7.25% note payable issued on August 1. 12 equal annual installment beginning August 1 next year. So the first 90,000 is current. The company's December 31 FS were issued on March 19. On January 23, the entire 150 balance was refinanced. Again, the refinancing happened after the end of the reporting period. So 150 remained current. In addition, on December 29, the company consummated a non-cancelable agreement. So refinancing also, but on December 2019. Highlight nga natin ito. Since the refinancing is completed before the end of the reporting period, the 1180 is non-current. So only 1150 is current. Problem 3. By the way, there's a correction for problem 3. The company paid the employee on March 1, not March 31. Please correct your notes. On January 5, 2020, the company received a 5 million complaint from one of its employees who suffered an accident while in the company's production department. Last December 30, 2019, the legal counsel believed it will lose the case and the best estimate of the loss was 2 million. The complainant offered an out-of-court settlement of 3 million but the company did not accept. So this is provision, right? So we will use IAS 37. On February 28, the court ordered the company to pay 2,500,000. So the settlement on February 28, on March 1, is considered as event after reporting period. So will this affect the recording of the liability? Well, the answer is yes, because the settlement of 2.5 million is an adjusting event after the reporting period. So we will also discuss some provisions of IAS 10. The company has 10 million comprehensive insurance policy with 500,000 deductible clause. This is the concept of reimbursement, also in IAS 37. Meaning the company will be reimbursed by the insurance policy up to 10 million, but the first 500,000 will be paid by the company. The company's financial statements were issued on March 15, 2020. So notes muna tayo. Again, what is a provision? Provision according to IAS 37 is a liability of uncertain timing and amount. Actually, provision is recognized on the face of the statement of financial position because a provision is a present obligation, and then this is probable, and this is measurable. Probable. How is provision different from contingent liability? Contingent liability, on the other hand, is a possible obligation and not probable nor measurable, and therefore the most that we can do with contingent liability is disclosed only in the notes to FS. Now, the problem is the amount, the measurement of the provision. So how do we measure measurement of provision? According to IAS 37, let's go to IAS 37. A provision, paragraph 36. The amount recognized as a provision shall be the best estimate of the expenditure required to settle the present obligation at the end of the reporting period. So, measurement of provision is the best estimate. Now, there is a problem about best estimate. What is best estimate? How do we determine best estimate? Go back to 37. According to IAS 37, the best estimate of a single obligation is the individual most likely outcome. But if it is a large population of items, if the provision involved a large population of items, the obligation is estimated by weighing all possible outcomes, which is called expected value. Yan. The provision will therefore be different depending on whether the probability of a loss of a given amount is, say, 60% and 90%. But where there is continuous range of possible outcomes, each point in that range is as likely as any other, the midpoint is used. So, if it is a single obligation, the best estimate is the most likely outcome. But if there is a large population of outcomes, we will use the expected value. What is expected value? Say for example, in this case, the lawyer only provided 2 million as the best estimate. So that is single obligation. But what if the lawyer says, there is a probability that we will pay 2 million or 2.5 million? We will ask for clarification. We will ask the lawyer, what is the probability that we will pay 2 million? What is the probability that we will pay 2.5 million? Say for example, the lawyer answered, it is 75% that we will pay 2 million and only 25% that we will pay 2.5 million. The expected value is 2 million times 75% plus 2.5 million times 0.25 times 25%. That is expected value. However, there is another case. However, if each point in the range is as likely as any other, use midpoint. Say for example, the lawyer would say, the probability that it is 2 million is equal to the probability that it is 2.5 million. Then what we will do? 2 million plus 2.5 million divided by 2. That is midpoint. Okay? So to answer this problem, our entry on December 30 will be a debit to loss of 2 million, the best estimate, and estimated liability of 2 million pesos. Now, on March 1, the company was ordered, on February 28, the company was ordered to pay 2.5, and on March 1, the company settled the obligation. So what is our entry on March 1, 2020? This is December 30, 2019. We will debit estimated liability of 2 million, right? But our credit to cash is the amount ordered, 2.5 million. Does it mean that on March 1, we will record another loss of 500,000? Is it correct? Well, the answer is no. The loss must be recorded not in 2020 but in 2019 because the obligating event is in 2019. Therefore, on December 31, 2019, we shall make an adjusting entry. Well, the basis of the adjusting entry is the event on March 1 and February 28. The court order of for us to pay 2.5 million, but we will not date the entry as of February 28 because that is an adjusting entry because this is an event after reporting period. Remember in IAS 10, event after reporting period. Ayun, events after reporting period favorable that occur between the end of the reporting period and the date when the financial statements are authorized for issue. So the financial statements, according to the problem, were issued on March 15 and the event happened on 28 and March 1. And is this an adjusting event? Let's read. An entity shall adjust the amounts recognized in financial statement to reflect adjusting events after the reporting period. Example, settlement after the reporting period of a court case that confirms that the entity had a present obligation at the end of the reporting period. So therefore, even if the event happened on in 2020, the adjusting entry must be dated December 31. So debit another loss. So we'll have adjustment of loss. This time, the balance of 500,000 and another 500,000. So the total loss will now be 2.5 million. So therefore, on March 1, our entry will debit loss of estimated liability of 2.5 million and cash of 2.5 million. Okay? Sige. Next. The company has a comprehensive insurance policy of 500,000 deductible clause. The company's financial statements were issued on March 15. So, talking about reimbursement, ano sabi ng IAS 37 dyan? Reimbursement. Yan. Where some or all of the expenditure required to settle a provision is expected to be reimbursed by another party, the reimbursement shall be recognized when and only when it is virtually certain that reimbursement will be received if the entity settles the obligation. The reimbursement shall be treated as a separate asset, meaning we are to recognize a receivable. The amount recognized for the reimbursement shall not exceed the amount of the provision. In the statement of comprehensive income, the expense relating to a provision may be presented net of the amount recognized for reimbursement. So, anong consequence? Since there is in a comprehensive insurance up to 10 million, we can actually record or can be reimbursed up to 10 million. So that amount of 2,500,000 may be reimbursed by the insurance policy, but the first 500,000 will be shouldered by the company. So another entry on December 31 to adjust based on the reimbursement is to debit a receivable of how much? Only up to 2 million. And credit to, bawasan natin si loss because loss is up to is recorded as for 2.5 million but again the loss according to paragraph 54 in the statement of comprehensive income, the expense or the loss relating to provision may be presented net of the reimbursement. So 2.5 minus 2 million, so credit to loss of the same amount. So what's our final entry for this? If we are to summarize these three transactions, ano magiging final entry natin? Debit tayo ng loss of 500,000. Debit tayo ng receivable of 2 million. And credit tayo ng estimated liability of 2.5 million, and that is our entry on December 31, 2019. So to answer the questions, by the way, dagdagan natin si notes pala. Notes on reimbursement. Para may notes kayo. One, separate, recorded only if virtually certain. Number 2, recorded as separate asset. Number 3, must not exceed the liability. So meaning in this case, we cannot record an income from the insurance company. And number 4, expense or loss is recorded net of the reimbursement. Okay, so this is our notes. So to answer number 3, what amount of loss? Our answer is 500,000. And what amount of liability? Our answer is 2.5 million. So 500,000 for number 3 and 2.5 million for number 4. Next, anong tanong dito? Discuss the proper accounting treatment for each of the independent situations above. In August 2019, a worker was injured in the factory in an accident, partially the result of his own negligence. The worker has sued the company for 800,000. Counsel believes it is possible but not probable, highlight natin, that the outcome of the suit will be unfavorable and that the settlement would cost the company from 250 to 500,000. Is this a provision or contingent liability? This is only a contingent liability because the occurrence is only possible but not probable. So again, the most that we can do for contingent liability is disclose. So disclose in the notes to financial statement the existence of contingent liability with a range of 250,000 to 500,000. Hindi natin ito i-midpoint ha. So, disclose in the notes the existence of contingent liability with a range of 250 to 500,000. Again, why is it contingent? Because it is only possible. Unfavorable outcome is possible, not probable. Next. A suit for breach of contract seeking damages of 2.4 was filed by an author against the company on October 4. The company's legal counsel believes that an unfavorable outcome is probable. So liability. Provision. A reasonable estimate of the award to the plaintiff is between 600 and 1.8. No amount within the range is better estimate of potential damages than any other amount. So ito yung case na each point in the range is as likely as any other. So 600 plus 1.824 divided by 2, 1,200,000. So recognize a provision of 1 million. So ano entry natin dito? Debit loss of 1,200,000. Credit estimate. Same amount. 1,200,000. Next. The company is involved in a pending court case. The company's lawyers believe it is probable that the company will be awarded damages. Will be awarded. So we are the winning party. But it is only probable. Is this a contingent asset? Yes, this is a contingent asset because the awarding of the damages is not virtually certain. If it is virtually certain, it is no longer considered as contingent asset. But since it is less than virtually certain, it is probable, it is considered as contingent asset. So ano yung rules natin ng contingent asset? Contingent asset. Number 1, if it is probable, what we can do is disclose. If it is less than probable or possible, we will ignore. So what's our answer here? Answer is disclose in the notes to FS the contingent asset of how much? 1 million. Unahin na. Okay. Next. So again, for number 5, answer for situation number 1 is disclose. For situation number 2, recognize a provision. And for situation number 3, disclose only. Next, so at December 31, what amount should the company report as total accounts payable? SM investment accounts payable at December 31 totaled 1,700,000 before any necessary year-end adjustments relating to the following transactions. So our unadjusted balance is 17. On December 27, the company wrote and recorded checks to creditors totaling 400,000. The checks were mailed out on January 10. So on 27, recorded check. So debit tayo dito ng accounts payable and credit ng cash in bank of 400,000. But the checks were mailed only in or on January 10. So if we are to ask ourselves, have we paid the accounts payable as of December 31? Our answer will be no, because the checks were not mailed yet as of December 31. So we will reverse our entry on December 27. So our entry on December 31 is to debit the cash in bank account again and credit the accounts payable account. So adjustment is add to AP. Yan. Next, on December 21, the company purchased and received goods for 300,000, terms 2, 10, and 30. The invoice was recorded on January 2. The goods were received already as of December 21, but the invoice was only recorded on January 2. So the accounts payable as of December 31 were understated. So same. Add the 300,000 to your accounts payable account. Goods shipped FOB destination on December 20 from a vendor to SM Investment Corporation were lost in transit. The invoice cost of 35 million was not recorded as of the date of the financial statement. So FOB destination, the ownership of the goods transferred. If the goods will arrive in its destination, so goods in transit are owned by still the seller or the supplier. So on December 20, the goods were lost in transit. We are the buyer, so the goods, we will not be affected because the goods are still in transit. So, is it not recorded? And we should not record the purchase, so no adjustment. Goods shipped FOB destination, so same provision. Destination on December 26 from a vendor were received on December 29. So since the goods were already received, the shipping terms are not considered because the FOB terms are only considered if the goods are still in transit. The invoice was recorded, the goods were received, so no problem, no adjustment. Goods shipped FOB supplier on December 22 from a supplier were still in transit. FOB supplier, ownership of the goods are transferred at the point of shipment. The invoice cost of 47 was not recorded. Well, the goods are still in transit, so the goods are already owned by the buyer. In this case, we are the buyer, and the goods or the invoice was not yet recorded. So, add. It should be recorded, but it was not recorded. So, what's the answer? Beginning is 17 plus 400 plus 300 plus 47.5. 2447 500. Okay. Next. On June 18, by the way, there is a correction. SAD Corporation received from Delighted, not the other way around. And the question must be June 30, 2019, not 2017. So SAD Corporation received goods from Delighted with list price of 80,000, subject to 20% and 10% trade discount with the credit terms of 2, 10, and 30. 80% is the list price. We all know that we do not record purchases using the list price. We record purchases using the invoice price. So purchases are recorded using the invoice price. Always remember this. What is the invoice price here? 80,000. Invoice price here is 80,000 times 0.80% times 0.90%, 57,600. Sad corporation records netong cash discount. Well, wait. The transaction date is June 18, but the payment date is July 8. The discount period is only 10 days. So, beyond the discount period, so no discount to be deducted. The goods were shipped, shipping point. Who should pay the freight? The buyer. Freight collect. Who actually paid? The buyer. So the 1,500 will not be included as part of your accounts payable because it is actually paid by the buyer and it should be paid by the buyer. So the accounts payable is the invoice price, 57,600. Next, Tim Starks is the new accountant of Watts Company. The company purchased merchandise on account for 9 million. The credit terms are 2, 10, and 30. Tim has talked with the company's banker and knows that he could earn 8% on any money invested in the company's savings account. What is the savings or loss by taking the discount? Okay, so discount. It's between discount on payment within the discount period and interest if we are to invest the money which will be used to pay the obligation. So the discount is 9 million times discount rate, 2%. How much? 180,000. But if we are to invest the money in a bank interest, if we have 9 million and we will invest it in a bank which will pay us 8% for how many days? The credit term is 30 days, discount period is 10 days, so we can invest the money in the bank for 20 days only. So times 20 over 360, how much? 9 million times 0.08 times 20 over 360, 40,000 only. So we have a savings by taking up the discount of how much? 140,000. So savings of 140,000. Okay, next. The company's salaried employees are paid bi-weekly. Occasionally, advances made to employees are paid back by payroll deduction. Information relating to salaries for the calendar year 2019 is as follows. Employee advances, these are receivable from employees. Accrued salaries payable, 65,000. Salaries expense during the year is 650. Salaries paid is 625. So again, if we are to prepare a schedule here of your salaries payable account, your beginning is 65,000 and during the year, the expense is 650 and payment is only 625,000. So you have additional salaries payable of 25,000. So 65,000 plus how much? 650,000 minus 625,000. Ano to? 25 plus 65, 90,000. Okay. Last problem, because as I mentioned a while ago, I am only to answer numbers 1 to 11. Dinimplayo and Mr. Panganiban will answer the remaining problems. The company is considering two different proposals for computing the bonus for its new company president. The first plan states that the bonus would be equal to 6% of its profit after the bonus, but before tax have been deducted. The second method is based on profits after both tax and bonus have been deducted. That's the so algebra. for first plan, bonus is 6% of profit before after bonus, but before tax. Ito sinulat So, anong solusyon natin dito? Ay di 9 million divide 1.06, that's 100 plus 1 plus the bonus rate times 6%. Ano to? 9 million divided by 1.06. 06. 509. 434. Okay. For number 2 or second plan option is based on profit and so bonus is okay. So anong formula natin dito? Bonus is equal to 12% times 9 million minus bonus minus tax. What is tax? Is 35% times 9 million minus bonus. Actually, my shortcut. 12% times 65%. 0.12 times 0.65. 0.65 is the after tax rate. 0.0078. 9 million times 12% times 65% is how much? 702. And then our rate will be 1 plus this one. This is how much? 1.12 times 0.65 is 1.078. So our bonus is equal to 702,000 divided by 1.078. 651, 206, 206. Okay, 651, 206. Okay. Okay, that's it, class.